Welcome back, everyone, to the second session of the day. It brings us to one of the most pressing topics in global insurance, how to build resilience in an era where risks are increasingly interconnected, from climate change and geopolitical tension to shifting economic forces. Moderating this critical discussion is Mr. Gamal Sak, the Regional Director for Northeast Africa and Middle East and Africa Reinsurance Corporation, Africa Re, the main sponsor of Sharm Rendezvous. Welcome him on stage. And he's joined by a panel of esteemed speakers, Dr. Markus Schmalbach, CEO of RiskX, and I hope I pronounced this right. I do wish you a fruitful discussion.
Hello. Hopefully you can hear me well. Thanks a lot, first of all, for inviting me, coming here. As you can imagine by my name, I'm German, but I'm working in the London market space. But beside that, just to add, I know this is not the AI session, but I will have some slides with me who are reflecting also and bringing also AI into place as soon. This is more or less what we are working with and what is our main focus and our main business. As soon as I'm beside being the CEO of RiskX, we are Lloyd's of London-based company sitting on the fourth floor. Whenever you are there, say hi, please. I'm a professor also for AI and blockchain at a business school in Europe. So I have a bit an interconnection of both topics, which I would love to a bit speak about. But let's first of all do not talk about the solution and more likely outlining the problem. I brought this with me. I do not know if you are born up in a time where Mrs. Pac-Man has been played. It was a very easy computer game. There's been two versions of it. In the first version, you are Miss Pac-Man, you have to eat some food and you are hunted by ghosts. In the first version, it was really simple because the ghosts followed some patterns and it was really a bit boring because it was so easy programmed that the ghosts are, after the fourth time you have played it, will not get you anymore and you could day by day renew your high score. But then there has been a second version and it changed. The ghosts changed their patterns. You could not expect anymore what they do. It was a bit more difficult. And why I'm telling about this, not for remembering my youth, it's more likely the same thing with insurance, I would say, or the same thing with threats and risk, what we see. In the early days of insurance, risk were like the ghosts, very simple, very easy understandable, very much following patterns. And in nowadays time, we talk about the VUCA world, which is still not super new. VUCA stands for volatile, uncertain, complex, and ambiguous. And this is what we expect as the world is at the moment and is now. It has been defined by the US-American Army in the 70s. So for them, we live since 50 years in a VUCA world. I would say for the insurance world, it's more or less a decade or two where we see that there's a bunch of risks coming together and just insuring single monolines are not just possible anymore. And this slide hopefully tries to a bit outline that we have macroeconomic influences which then end up in pandemic, systemic healthcare and shocks, which on the other hand side are linked with climate change and environmental volatility. So you cannot see each risk anymore as a single pattern. It all is connected together, and this ends up in shocks which affect the whole world and in several spaces at the same time. Okay, now, sorry, all good, sorry. Can you go back? Yeah, thank you very much. This is why I would call RiskX as being something like a SWAT team. If you know from American movies, SWAT stands for Special Weapon and Techniques. So the most of our clients come in with risks or when they want to cover risks which are not in a traditional way insurable. Due to the fact that the law of large numbers is just not effective anymore. And then we acting with so-called parametric logic. Instead of indemnity, we used to answer and address volatility and systemic risks with parametric solutions as somehow the answer to the VUCA world. First of all, and this is where AI comes into play, what you need is a trigger, which is defined. For example, going back in time, the trigger for the payout of the Titanic in Lloyd's in the 1914 has been that they do not reach the haven of New York, and they get an information to London that the ship just did not arrive. And this was mainly the trigger to pay out. We do not see this in our world anymore. It's getting more and more complex, but sometimes you need money very quickly and very fast. So Parametric is a structure where you define a clear trigger, and you need a lot of data and data points to really price the risk in a correct way. And there is where AI comes into place to assist you. Special AI like machine learning is of great help to define patterns or bring data together, which then help you to define the patterns, and you are able to price then by the support of AI and make what we would call uninsurable risk insurable. Why blockchain? Maybe it's a personal interest of mine as a professor for blockchain to help the blockchain to somehow become relevant in our markets, and the blockchain helps us that we tokenize so-called the risks to share them and split them over the market, which is also part of our storyline to say, okay, maybe the capacity for some risk is not enough, and we need to ask to get support from our friends, the capital market, which is normally in the next slide. Give me a second. Okay, I have no next slide, as it seems like. Okay, this is exactly what it is. Okay, thank you. That helps you a lot. To the left, you see the wonderful building of Lloyd's of London in London, and what we try to do is establish that risk might be an asset class, which is then transferable into capital markets to get assistance of the big brothers of us from the Wall Street, but also from big banks in China or the Middle East, to assist to cover especially the systemic risk, because systemic risks are sometimes just too big for the traditional insurance books. And this is how we set up an infrastructure, a platform, where we try to make use of very innovative and great opportunities from the insurance market, like captive insurance, reinsurance capacities, and as I mentioned, Parametric, and link them, as the storyline is risk as an asset class, with capital markets. We are especially partnering in some spaces like Connecticut in the US, where many hedge funds are based who are partnering with us, or on the flip side also, as I said, in China or Middle East are already partners of us, which are non-traditional insurance players, but who are accepting that risk can also be seen as an asset class, investing in systemic risks, also to supporting the market and building resilience in that space. Okay, sorry. Yeah, finalized, I would say we have an interconnected risk demand and interconnected, on the other hand side, intelligence. Means, if I can come back to my Miss Pac-Man, the game changed. It's not, the patterns are not visible anymore as in the insurance world 1.0. We are living in the insurance world 2.0, where we have systemic risks all around, especially due to climate change. And some of the concepts we have, which are most underlined to the law of large numbers, are just not effective anymore. And because many risks affect us by the same time, in the same way, as soon as risks do not see borders or do not differ between books of different insurers. So what I see myself as and part of the future of the solution is definitely using AI as a support in the underwriting, because you can see with AI much better how patterns interact with each, or how risks, and data sets interact with each other, and you can make much better predictions than a human could do. Also, it helps you to predict, which is of greater importance. The insurance industry is very backward-oriented due to pricing and giving capacity to the market. If we have a bad year in 2025, the risk pricing increases in 2006, and we have less capacity in the market, which is sometimes just, sorry for saying, stupid, because if we have a year 2025, which have been hard, maybe you get the prediction that 2026 will be a good year for you. So finally, the pricing is always backward oriented, but it should be more likely upfront and ahead oriented. So this also helps us and help to build for our clients and ourselves some way of resilience, because as you can predict somehow the future and can define it much better, due to AI, you will also have to have the opportunity to build preventions and an early warning system affecting your own book, which helps you on the one hand side, but also it might help your clients to prevent for risk. And the best risk are the ones which are just not happening or not affecting any book of us or any property, for example, of our clients. So what we built here is more likely, let me summarize, a platform bringing in on the one hand side new capacity and new capital. Okay, new capacity and new capital from the market, and AI helps us just to make it understandable for the capital. Thank you.